The demand outlook we have poses a number of challenges to the refining sector. The first is a transition back to being distillate-led. Since the crude oil price collapse of 2015, gasoline has been the product that has set refining runs. Our demand outlook suggests this will not last, as US gasoline demand, the world's largest gasoline market, is forecast to decline from its 2017 peak. In addition, although the forthcoming change in bunker fuel regulation is a key uncertainty, the requirement for cleaner distillate fuels will be supportive to refining earnings and distillate crack spreads from 2020. The decline in OECD gasoline demand presents opportunities and challenges to the global refining sector. The challenge depends upon refiners' location. For coastal sites, how do they export gasoline competitively to more distant markets? Whilst for those in inland markets, how do they protect themselves from increased competition from coastal imports? The opportunity is linked to the petrochemical sector, which is projected to grow strongly. This is not a solution for all, as currently the global gasoline market is almost 4 times larger than naphtha consumed in petrochemicals, so there is a risk that the gasoline market gets swamped. There is a longer-term threat to refining in the Atlantic Basin, which is based upon the pace at which capacity is added in other regions. Comparing the next 20 years to the past 20 years, the outlook for slower demand growth only requires capacity in Asia to be added at half the historical rate. New refineries in Asia tend to be large in scale, complex in configuration and integrated with petrochemicals, so they are globally competitive and hence can be expected to run at high utilisation rates. Should refineries outside the Atlantic Basin be added at a faster pace than regional demand growth, the threat of closure returns to weak refineries in the Atlantic Basin.